talking about my person, I'm in the real estate business since 30 years. I was with Generali Real Estate for many years. Then I joined Oppenheim Real Estate in Germany, which was in those days the by far biggest fund managing company. Then we've been bought by IVG, in those days the biggest real estate company on the German stock exchange. They sent me back to Vienna, and then I joined the board of directors of ImmoFinance. And in 2008, ImmoFinance was struggling a bit because of the crisis, internal and external crises, and we brought the company back on track. And in 2015, when I've left ImmoFinance, I started my own business together with two partners, one from Germany, Marco Kohler, whom I knew for 20 years, and with an American partner, Paul Hallam, who was and still is a very experienced and a very tough American guy doing great deals. Our business is, and I already said that earlier, collecting money from German institutional investors, and we have a group of probably 12 to 14 of the really big German institutional investors, setting up funds in Frankfurt under the German Investment Act, and then investing in whatever they want to invest. So over the last 5-6 years, we've collected 1.3 billion euros, and we have already invested approximately 1 billion, mainly in office buildings in Poland, in Hungary. You all know our three assets, the Merkopolota, the Central Utva, and the Rumbach Center. And we are now just entering the Czech market, and hopefully I can announce at the end of this year that we made our first step even to Slovakia. We had very good years. We really were lucky because we had this very good period at the end of this 12 years after 14 years after the crisis, 2007. We really managed it to make our company pretty well settled, and it's prospering. We were just, at the beginning of this year, we were just setting up a Resi fund, Resi for Rent in Poland. And we had a project ongoing with a big Austrian bank house to set up an office fund investing in capital cities in Central and Eastern Europe. And we had a third project, a cooperation with a big German logistics investor, setting up a logistics fund. And all three projects, we had to stop them because it's simply not possible to convince them to invest at the very moment. This is a shame, but on the other hand, we have some all equity investors, so we are continuing. And just 3 weeks ago, we bought 3 assets in Austria at a total investment volume of 100 million.
Okay.
So that's it. That's an overview. I don't want to say too much, but
thank you for that.
That's where we stand now.
Okay. And Peter, if you don't.
Thanks. Once again, my name is Peter. I'm one of the partners at Newmark VLK here. We're a brokerage firm active in all asset classes, agency, leasing, as well as capital markets. Reflecting to what you just said, there's a lot of things happening in the investment market. I wish that was true. The only thing that's going on in the investment market is scraping heads and waiting and trying to figure out what's going to happen, which we think is a normal reaction. Mm-hmm. What we're seeing is that there are deals that were either signed, which we hope to complete. Obviously, a lot of them subject to financing, which changed a lot drastically, especially in Hungary recently. There is money to be spent, we know that, but we feel that nobody wants to make a big mistake in terms of pricing, in terms of risk profile, in terms of geography. I think asset class-wise, everybody has a strategy. They know that what they want to be invested in. I don't think there's a problem with that, but everybody is struggling to find the benchmark pricing and the benchmark yields at the moment, and everybody is waiting for the clouds to clear. But we think the longer this goes on, the more pent-up capital is going to be in the markets, and it's going to have to be spent one way or another. And there are asset classes that have shown to be more resilient, which we believe will be resilient, and there will be transactions again. But we think it could take another 3 to 6 months before there's confidence in the market again. And we just hope and work very hard to complete those deals that are done in the meantime. And as every difficult situation hopefully gets the best out of the market and the market players, we think it's gonna clear the market a little bit. It's gonna make it more stable. It's gonna make it more rational, and it's gonna differentiate the good ones, the strong ones, the smart ones from the ones that were just riding the bus.
Sure. Okay. And Thomas, let's go to you. Tell us a little bit about yourself, your company, what you guys are.
Well, I've been in the market since mid of the 90s. So I've started off in Denmark, being a Danish citizen. Went to Sweden, Stockholm, early 2000, and spent 10 years in Prague, from 3 to 13, 5 years in Serbia for a company called MPC, being the biggest developer investor in the Serbian real estate market, and joined Allianz Real Estate in 2018. Our main focus at Allianz these days, buying, also selling. So I'm covering, as I said before, 9 countries. The Nordics just came on top of the Central Eastern Europe and Austrian region. So that's it. Peter, time for you.
Thank you. My name is Peter Szamely. I'm head of department of Hypo Bank. Hypo Bank is a state-owned public financiers, and also we are financing real estate portfolios, roughly 3 billion, and 1 billion is extending in Central and Eastern Europe, plus Germany, Austria, and Holland. I've been in the business since 1988. I started my career in the Hungarian Credit Bank, and those days the inflation rate was a bit higher than 30%, so it's the half interest rate. So in that sense, we are still in a good shape. I left that department after a year or so because it was supposed to be a lending department, but we haven't done anything else, just providing working capital loans short term, and there was no investment loan possible. Turning to real estate by luck or by unluck, and in the last roughly 25 years, I've been lending on property here in Hungary and also in Central and Eastern Europe. Our focus is on commercial assets in this part of the world. In Western Europe, we are providing residential loans as well, but there are different historical differences between these countries. I think we are facing challenging times, and I'm happy to share my view and listen to your views how to cope with these challenges.
Yeah, and we're always happy to get some questions even during the panel. So if you got any comments, so if you want to make any comments or anything, please raise your hand. We'll get you a microphone. So Peter, did I understand that right? When you started, it was already 30% inflation?
That was the half, yes.
Yeah. So this is actually no problem now for
exactly.
you. It's like
easy,
half.
Easy times.
It's only 15% now, right? Okay.
Well, yes.
So Peter, let's jump back to you at Newmark. You were mentioning that, hey, it's tough to do investment deals and nothing seems to be going on. You think you're just waiting for the dust to settle and people will be back in, or what's stopping them mainly? Is it the financing? Is the cost of construction? What's just the uncertainty in the market? What are you hearing?
It's all of these things that you just listed. Obviously, when there's a unpredictable end to a situation and an unpredictable time, in Ukraine, even though we know we're not so close as to be, directly or physically affected, when the world listens to a problem which is close to you, it's becoming your problem, whether you like it or not. So you can't run away from that. What we've seen is that those investors that are already in the region, they're not that much concerned, that they know that this, these Poland, Czech, Slovakia, Hungary especially can be relatively in the long term not affected. In the short term, yes, but with real estate cycles, 5, 10, 15 years, 1, 2, 3 years, you always have to be ready for something to happen. But I think everybody knows it is in this room. If you have a great plot, you want to start a project, you cannot get bank financing for it. Peter will tell you, or the conditions he will ask from you are conditions maybe none of you can fulfill. And even if you can, your interest rate is going to be through the roof. Everybody has forgotten the IRRs of high teens and low 20s because there is no leverage. But I think, in real estate, you can talk about asset classes, you can talk about financing a strategy. It's always the end user and the health of the end user that defines how good an investment a real estate investment can be. And I think that's where everybody really needs to pay attention now. If you have a portfolio of offices, you really have to monitor your tenants right now, their business, how are they affected? We see in retail where there's a pressure on the income or the revenue of the tenants and the cost rising. The margins gets pressure from both directions. So we think that's definitely, an orange or red flag. Office, we see that, great location has always weathered every storm and every crisis, and we think it's going to be the same. We think companies' cost related to office renting as opposed to total cost of operations and labor is still not that significant, but the cost increases everybody is seeing in their portfolios right now. It's really making everybody think whether we should invest in an office. I was just telling Manfred a couple of weeks ago, we received the first notice from a building owner where the service charge was actually higher than the rent.
Ouch.
Prediction. Yeah. It's a B category office, €9 or $8.50, I think, for rent and $9.25 for service charge. So when your tenants are going to face that, you're going to have an interesting discussion.
Did they say how the tenants were reacting to this? Because obviously they're in a B-class office building to save money, yeah?
Yeah, but that's not going to happen. Nobody's going to be able to save money. I think they're just going to have to deal with how to manage the increases. And yes, everybody will reevaluate how much space they need and how they use it. But parallel, we also see that good quality offices, especially that run efficiently on energy, they will be in higher demand. So we think investors will actually gear up to get more exposed and invest in those offices. Obviously hotels is another ball game. Zdenek could tell you about it, but you would want to be very careful for owning a spa or wellness hotel. These days, and probably best thing is to close it as quick as possible to save yourself as an investor and the operator. I think city hotels will do okay. Of course, they have to have the reserve to go through the period. But all the asset classes I just said, there is a wait and see what happens. We're working on deals where there is a signed term sheet, and people, the parties are like, let's just reevaluate. We have SPAs signed subject to financing where there's a huge struggle to get the actual financing and carry through with the deal. And everybody, like you said, is waiting to see if it's going to get worse because then maybe we can buy cheaper. It might be, but we don't think it's going to get a lot cheaper, especially if you have a strategy for the type of asset that you want. This is probably a good time in the next, 1 or 2 years to buy what you always wanted to buy in any of these cities. There might be a little bit less competition,
And Manfred, Peter just mentioned the war and investors looking at this as an issue. I think you have American investors, and I assume there is some conversation about this. Then they're probably asking you a few questions if they're sitting in New York or London, yeah?
Absolutely. Craig, our investors are just German investors, but of course some money is coming from the United States as well. Of course they are concerned, and many of the Americans, they don't really know much about Europe, And if they hear that there is war in Europe, they are not making a huge difference between the Netherlands and Poland and Bulgaria and Ukraine at the end. So of course there is some need to explain and to make clear what's going on on this continent. In May this year, I attended a conference in Berlin. It's called Investment Expo. Probably you've heard about that. That's a conference where all the institutional German investors are coming together, and in a 2 days conference, they're discussing investment strategies and their view of the world. And in May, they already told us, or I could hear it in the panel discussions, our asset managers and investment managers shouldn't bring any interesting opportunities to us in 2022 because we are simply not even considering doing anything. And I thought, now, okay, that this is probably not the whole truth. And of course, if you bring them something very, very interesting, they could move a bit. But already in May, most of them made the decision to stop investing in 22. But on the other hand, we had an annual meeting of our investors of one of our funds last week in Vienna. We heard that they are starting thinking about or rethinking about their strategy. So we could really hear that they are expecting opportunities, and in 23, so from next year on, I think they will be open-minded and interesting in doing things they wouldn't have even considered this year.
So, well, 2023 is coming up pretty quick.
This is coming pretty quick, and real estate business is like water; it always finds its way. And so I think we will be on tour again next year.
Right. So Peter, what is your company's view now? What is your strategy for going forward on investing?
Well, we are following our customers first of all, and see what they do. But I think the next 6 months maybe will be a bit challenging. We will see how the winter will affect property owners and property users. We will see the service charge levels and also whether the tenants can cope with it or not. And we as a lender, we can't do anything else just to be in close discussions with our clients, just to make sure that they survive, or if they don't survive, not because of us, but because of other situations.
Sure. Okay, and and Thomas, you said at the beginning, you guys are buying, you guys are selling. Are you? We're talking to different investors, and some are saying, "Oh yeah, nothing's going on," and then we talked to 5 more investors, and they're all like, "Look, we're looking for stuff. We want to buy things." So, how active are you in buying? How active are you in selling? And if there's any hot spots or hot topics or hot sectors you want to look at.
If I should put a percentage on it, it might be 90-10. 90 selling right now,
okay,
and 10 buying. So we are cautious, like I think any other institutional investor. We believe that the recession is coming soon. First half of 2023 will be tough, I think, for everyone. We see cost of financing being higher than net initial yields. I think it's solely Japan which is not facing this at the moment. So it is for us a wait and see mode, as for many other of the big institutional investors. Over the past, or say the first half year 2022, you saw a lot of capital from Asia, mainly coming into the US, and in Europe it went to London. We are, if you are reading newspapers, we are starting a project in Ireland, a residential project of 122 flats. It's not a huge project, but we are, we started building this week with our partner Amazon. So we are doing things, but we are very cautious, and due to the uncertainty mentioned already several times from the participants.
So Manfred, it sounded like you're actually quite active. I mean, you're looking at Slovenia, Czech you were mentioning. So is kind of all systems go on buying, or is it also slowing down and tougher to do finalized deals?
At the very moment, we all know, of course, it's slowing down. But some of the investors we are representing are investing all equity. So that means that on one front, we don't have a huge problem. So we don't need Peter and his very expensive bank.
Sorry, Peter.
Sorry, Peter, and his very expensive bank money. And that's really very helpful. So we think about doing some all equity deals next year. And just last year, we won a mandate of a very strong bank house. And this bank house is investing all equity, and the volume is really a big amount of money, and we already started investing for them. So it I would say it really depends. If you need bank financing and if you need a loan to value ratio of, let's say, 50-50 or so, you have a negative effect if you take bank money. But if you can use your money and think about reinvesting or bringing in the bank house later on, probably in 2 or 3 years, you can make next year really interesting deals with a good perspective for the future.
Mm-hmm. So Peter, just talking about banking, and we invited a couple other bankers on, and they didn't want to come on stage. So anyway, thank you for coming, first of all. And if there's any comments or questions from the audience, just raise your hand. We'll shoot over the mic. Gary, let's. Okay, so we'll do Gary right after we do that. How do you see the market? I mean, from your guys' point of view, are you busy? Are you getting clients saying, "Hey, we need loans for this, we need loans for that," or is you finding that the market is quiet? What's happening from your end of just inquiries?
Well, actually, we are very busy. So we're still, transaction started this year. We try to close by the end of the year. But it's difficult in the sense that if you have an approval, say, end of spring, say May, and in the meantime, you work on documentation and try to disburse, and the interest rates are on the rise, your covenants are not the same that they used to be at the time of the approval. So this 3-4 months, which takes for a transaction, kills sometimes the financing. So that's one issue. But I think the general level of the interest rate is. I don't think that should be the issue, because we had. Before Lehman, actually, this level of interest rates. The issue is that the yields went down drastically since then, and with this yield environment, the mortgage lending seems to be expensive. But I think at the end of the day, I don't think how many full equity investor can cover the market. But I would say that they are in minority, which means that at the end, it's good for them because they can have a big selection, but the prices probably will go down of property because of the reduced number of buyers on the market, and also finance is actually available. It's just development financing, of course, is an issue. Pre-let, construction prices. There are a couple of risks around, and investment transaction, i.e. existing cash flow producing product. Peter already pointed out, I think, if the service charges are increasing, then it could be difficult for a tenant to stay in the building, which means that the cash flow will be reduced, and this is what we need to think. So green building, energy efficient building have kind of priority.
Yeah, and it seems like a lot of the developers we're talking to, the real problem in the case right now is just doing the fit outs, and especially if they're leveraged at the bank, it's hard to go back to the bank and say, actually, we need another €1,000 a square meter to do the fit outs.
Well, I mean, it's interesting because there are different attitude of developers. We had a client just only 1 year ago completed a project, and it was here in Hungary, and And because of the change of the law, they want to finish, complete the building before this change in terms of getting use permit, because after a certain date, you only get the use permit if the building is meeting certain green criteria. So the additional investment was not that much compared to the whole development cost, but they decided to speed up and get the use permit before. And as a consequence, the building is less green as it could have been.
Right. So they're getting in before the laws change and get tougher. Yeah.
On one hand, yes. In short term, they were better off. But if I look at them from today's perspective, I don't think they were better off. And it's just a minor investment, essentially. But it's strategy and availability of cash, various things.
Right. I mean, I know just on when we were mentioning hotels and just talking to some of the hotels in the region, they just said, well, look, or in the city, the gas prices went up 10 times more, not double, not triple. So if they can save any little bit, probably it makes a difference. I mean, a little bit on the construction, it's going to make a difference pretty quickly on running the whole building, I would imagine.
Absolutely. An existing building to change is probably more difficult than to implement the investment at the time when you develop.
Yeah, absolutely. And Gary, you had a question?
It's really a question for the panel and other investors and consultants in the room. Has this situation happened before? It seems like the perfect storm. We have a war in Europe. We have inflation. We have rising interest rates. We have a crisis in all the development markets apart from logistics. But even logistics suffer from rising construction costs, labor shortages, rising labor costs. If it's a perfect storm, then how can that resolve itself in 6 months' time? I've heard people talking about spring and everything will be fine after the winter. If there are so many problems, how will these be resolved? And secondly, as Peter said, or Manfred, the money has to be invested. So what will investors do? They will just try and ride out the storm with their investment. But essentially, how can it resolve itself and when? That's a lot of questions.
And we'll all become billionaires when we know the answer to that. So Peter, just what when your clients, when you're probably asking your clients that, right? How is this going to resolve itself before we give you the loan? Yeah.
Well,
I'll just use this thing with you.
Well, I mean, well, the short answer is I don't think that the situation will be solved by the end of the 6 months. So I think if we survive the 6 months, then we come into a recovery stage, and maybe in 12 months you can say that the market might have been recovered, and that's why we need to sit together again in spring and see first who left, and second what is the situation, and how to go around it. Yes, there is an inflation, but don't forget that the financial markets, in theory, they're reflecting the real economy. I.e., the issue is more in the availability of the energy, efficiency. So that comes in more in the background. And I would say if you have a stable cash flow and a good building, but maybe it's not energy efficient enough, and you want to have a capex loan, there is a likelihood that you can get a capex loan for making your building more energy efficient, because it makes sense. So it's
yeah, there's a lot of money out there for that too, right? To become green and ESG. Yeah, sure.
Maybe just to add on that one. So we have a roughly 2 billion in the Nordics and 2 billion of assets in Central Eastern Europe, and we're doing exactly the same. So in this wait and see period, we have a great core portfolio, and we are investing in our own buildings, so making it more sustainable. I think we will talk about the ESG a little bit later, so not to go into details here, but we really flag that as a very important point. So we don't want to see our assets being stranded in 10 years time. So right now there's a lot of focus on the existing core portfolio.
And Peter, on our side over here, what your comments on that? 6 months done, investors happy and going forward?
When Gary came up with the questions, first part, like, do we remember anything similar? I was going to say I'm too young to remember any serious
Yeah, it was always good, wasn't it? I was
trouble.
all happy.
But I think your phrasing is very, very good, is that it's the perfect storm. But I think if you look at it, what has created this, I think everybody kind of believes that once the cause of the perfect storm goes away, that all the troubles will go away. But I don't share that. I think it's going to take time. You know, when COVID came, there was a lot of thought like, okay, in 6 months, we'll be back to normal right after the virus disappears. Then, not that we're the smartest guys, but we said it's a little bit like you're going on a highway at 140 speed, going, braking to full stop, and then going back to 140 takes you time. So that's when we said it's going to take 2, 3, 4 years. We're 2 years into it, and then the work comes. So I share with you, I think it's going to be a longer time. When I say we hope for next year to arrive, is that when the dust settles a little bit more and we can see the separation of the cause and the effect, what was really caused by the energy, which is much related to the Russia-Ukraine situation, and what was everything else, the compression on the yields and the overheated markets. But I actually learned this from a banker that when the crisis comes, you have to take your best clients' hands and do everything you can to save them. And as soon as you can, you have to let everybody else go. That's how you survive as a banker. But I think the answer to your question is, just yesterday, I participated in a banking panel. The bankers were trying to tell people what to invest in. And they didn't put a lot of emphasis on real estate. They said the stock market is down, so it's a great time to buy now. You can have 20, 30, 40% return. Same for the bond markets, same for the sovereign funds. So I think on a big macro level, we will see money going away from real estate a little bit. But core real estate is going to go back. And it's going to come back, I think, quicker depending on location and quality of building. And I know you only wanted to talk about ESG later, but I think there's one very important point about ESG, that this is the time when we all realize that what we thought ESG was until now was not ESG, was not about energy efficiency. It was about marketing the buildings and putting a nice stamp on it and a sticker and say that we're platinum or gold or whatever.
LEED or BREEAM.
That was crap. We know that we're among us, we can tell that it was not true. Now, an energy efficient building is what real ESG is, I think, or at least the E part. And investors and users will want to be in those buildings where they have to spend less. And we already see this filtering down on investment briefs, that the normal valuation of a building is standard if it's really energy efficient. And they don't pay a premium for an energy efficient building. They pay a standard price for an energy efficient building. They'll apply a discount if it's a non-energy efficient building. So I think that will be a game changer.
Right. Well, if you're in the B-class office building and your service charges are higher than the rent, you are paying a premium to be in that building, aren't you?
Yeah, that's right. And that hopefully Peter will finance those CapEx loans to turn them into.
Someone must, yeah, exactly. So Manfred, we were talking about ESG. Okay, let's spend a little bit on E, because I think that's what most at the moment with the service charges, most of it is E, and we're getting a lot from, or it's the easiest to calculate, especially when the service charge comes. Right? We have solar panels. I mean, when we're talking to a lot of these investors and developers, it's really just a list of things that need to be done that we see. I know that sometimes on the industrial side, they say, okay, they've got the space, they're putting up some solar panels, they even put up wind, and it is effective. If it's not a big heavy manufacturing, they can run a lot of it off of renewables. But when you're doing office buildings or things like that, and I think even some of them are building solar parks somewhere and and selling that energy and buying other energy, what are investors actually asking you? I mean, especially from the German side or the US, if they're putting in money, they must have some list of things that need to be done. What's coming across? Or is it just, let's make money and we don't care about this other stuff? Of course, making money does matter.
Just making money is the old approach, and I liked it very much. But
it was clearer.
It was clear, and you could buy whatever you wanted as soon as it was a good business. It was fine, and everybody liked it. But of course, this has changed significantly, and ESG is dominating. It's I would say the main topic, and all the investors are very intensively working on this topic, and they really want to know that what they are investing is invested in sustainable buildings, and that's why we brought one of our funds, which was a normal investment fund investing in Western European countries. We brought it up to an Article 8 fund. Because that's absolutely necessary. If you want to sell some assets out of this fund again in the future, you have to prove and you have to make sure that the assets are sustainable in several aspects. There is no way around it that it will become much more powerful and much more interesting. So we have to focus on that. But I just wanted to ask Gary to answer on Gary's question. I never said that the situation will be like it was until February this year in 6 months or so. I just said next year there will be opportunities for ones who are interested in keeping their eyes open, and this is, of course, we can't solve the problems of the world. And what you described is a horror scenario. And at the very moment, we all are feeling very uncomfortable with the situation as it is. But one by one, the problems will be sorted out in the future, and we should really try to stay a bit positive, because the elder ones here in the room, they know that we have seen several crises in the past, and after 3-4 years, the situation usually recovers somehow, and we will find a new level for doing business. So let's stay positive and not commit suicide.
Yeah, it seems after every crisis, it's still the same core guys we know from before the crisis. Yeah, and
absolutely.
So the war in the Ukraine isn't going to stop in 6 months, and
absolutely not.
Material prices are going to keep rising. That won't stop.
Yeah.
Energy prices will keep rising. That won't stop. A labor shortage will continue.
Yeah. What you're mentioning are huge problems, and we all can see it. And we're discussing it at the expo, and whenever we meet, we are discussing all the same topics, and it's there. You're absolutely right. But we are not in the position to solve all the problems of the world. What we can do, and that's what we can promise to our investors, is we can take care of the buildings. We can keep the buildings in good shape. We can do very good maintenance. We can keep the assets fully leased. We can negotiate with the tenants to make them happy. That's what we can do, what we can contribute. And the rest, the war between Russia and Ukraine cannot be solved by us.
And there's always a war somewhere.
There's always a war somewhere, and it's politics.
Let's not hope Gary is going to take the suicide element too serious. So please,
we'll send Gary to Kiev to sort this all out.
But I don't want to be too philosophical about this. But the way I look at it is that the human race is very good at two things: is adaptation to any new situation and making the necessary changes to survive. That's one thing. And I think it kind of filters down everywhere. And the other thing is to make money. So when a way to make money is to adapt, then we'll adapt. If you only look at the last 6 months, how energy usage has changed in households and in companies, there is a reaction. So yes, maybe the prices will stay, maybe the war will not go away, but everybody in this room is already adapting to it, and it's going to trickle down on a property level as well. So I agree with Manfred that we cannot just put a blind on and say nothing is happening and everything is good. But if we do everything we can in our daily lives, we'll make it better and better. And by the time the big trouble goes away, then we can say, well, Gary was too pessimistic in 2022.
Gary was wrong.
He should buy us a drink.
Yeah. Well, even looking at Ukraine 2 years ago, I mean, I was talking to a lot of oil and gas guys and energy guys, and they said, look, there's plenty of gas there, but we'll never get it out of the ground because there's too much corruption, there's too much this, there's too much that, it'll never happen. Last week, they're like, well, actually, Ukraine can supply all of Europe with gas. So I think it's, like you said, it's, human engineering and, maybe a little bit more motivation on both sides to get it done. Now, is it going to happen overnight? No, but it could, in theory, there's enough gas there to actually power Europe. It's just, and they could have got it out before, but of course, like they said, too many corruption issues, probably too much influence from Gazprom in the old days.
And it's a timing issue as well. I'm not a political analyst, but I read a lot of it. And they say, the February 24, when the war started, was the perfect time to start a perfect storm because of the economy was just coming out of COVID, and it was looking at repricing, and the energy dependence of Europe on Russia was huge. So if in the next 2 or 3 years that dependence can be decreased and moderation can be applied and reinventing ourselves, then we can decrease that dependence, which will allow, not to have to be played with this card again.
Yeah. And it already is. I mean, they've opened 2 or 3 more pipelines that would have probably taken another 2 years, and they've, a lot more things. So, of course, it's in the LNG terminals. I can see going full blast getting open, and even, one in, is it Croatia that's opening the new LNG terminal as well? Yeah. Is it? Huh?
It's open and fully functional.
It's open, but it's just opened recently. Is that correct? Or
last year, and it's just enlarging the capacity.
Right.
Additional 50%, and it's actually Croatian LNG terminal is providing Slovenia and partially Austria with gas. Hungary, due to the relations, our government to Hungarian government due to Molina, is a bit complex, but and the gas is a trading commodity, and this is what we see now in the last. I'm sitting on the both sides, buying and selling. So the discussions, one of the major discussions in the last weeks is energy security. So the investors in nearshoring, in light industrial, they are choosing the locations which are near to the gas hubs, near to the gas storages, knowing that there would be more security to get the gas in the next 4 years. And Europe is always going to be dependent on someone. We don't have enough of root energy and roots in Europe, but then it's important, one, to choose partners which you can rely on long time, and second, to shorten the trade lines where it's coming.
Yeah. No, I remember when the LNG terminal opened, and it was almost like no one in Europe cared. Now everyone cares. And expanding it, so that's good. Coming on to, ESG, I'd like to just, if anyone's got any comments from the audience, we'd definitely like to hear from you. We also want to put Hubert Abt on the spotlight here for a second from Newmark, as I've heard many great presentations about ESG and their platform for rolling it out through all the Flex offices. And Hubert, if you could just tell us a little bit about what your clients are looking for or what you're telling the landlords you need. And Gary, if you would hand the microphone to Hubert, that would be great.
Yes. So ESG, we had the AGM 1 year ago, and the landlord and investor of us asked, are you affected by ESG? My answer was, why? We are only tenants. Then we started the ESG compliance initiative. And we asked our landlords, by the way, there is ESG. So I start basically digging in MIPIM last year, which was, I guess, in November, right? And we released the first ESG report in February, exactly on the 24th, which was very unfortunate because we didn't get any attention from the press. So now asking the landlords, listen, we have to prove against our tenants what we're doing in relation to ESG. We got the answer, what you're asking for, We don't understand. We are ESG compliant. We have a solar panel on the roof. But if you're digging into the data, because without having full data set, you can't even start the journey to ESG compliance, you realize that nobody, and I take the blame on ourselves, we are 11 years now in operation as Flex Operator. We had for 11 years no clue whatsoever what we are operating on. We didn't know where the energy comes from, how it's transformed, what we have losses in transformation, how we can manage that. And I tell you, 95% of total real estate stock today has no clue at all. If you're talking to investment platforms like Invesco, which under my knowledge is one of the biggest one in Europe, they starting to collecting data 3 years ago. 3 years ago, there was no ESG. There was sustainability and green, but there was no ESG in discussion. And as of today, they managed to get 80% data accuracy. 80, after 3 years of work. CAIMO started to hire a sustainable manager, chief sustainable manager, beginning of the year. So they need, again, 3 years to have a clue what happens in their 18 buildings around Europe. To make a long story short, this ESG is a transformation risk. According to McKinsey's studies, we're losing 40% of the value of the existing building stocks by end of the decade. This is in 7 years from now, without any mitigation actions on ESG compliance. And as soon the evaluator picking up the ESG stranded risk analysis, which is already in play, the top 10 rating agencies of the world have bought the license from the Real Estate Risk Analyzing Monitor from Sven Bienert from the University of Regensburg, and they're using this tool. So Peter, as a banker, will be forced to use this tool again. And he will go to the buildings, down to the properties, and he will analyze it. And he will find out that between 10 and 40% of the risk of the valuation is on risk, which means it requires an additional capex to fight against the risk, not talking about premium, only keeping the value today, okay? So this cause a lot of business opportunities, but I'm really afraid we are really not aware. If I see the Redaction Expo 2 weeks ago, we are not in the state today that we really can say as an industry responsible for 40% of the carbon emission that we are prepared today. We are not prepared today, face it. There might be some exceptions, but in a broad aspect, we are not prepared. It's just, to kick off a little bit of thinking. Maybe Property Forum last year in Vienna, ESG was just a little bit on discussion. And the guy had to fight against the Allianz on the very first evening, the networking evening. Everybody was happy, first time after lockdown, getting party again. And he tried to make some presentation and nobody was listening. And he said, "Oh, can I have one question, please, one question?" He took the mic and he was wandering around. He said, "Who of you thinks that ESG is a threat for our business?" All hands up. I said, "Who of you thinks you did already enough to protect you and your family and your assets against this threat?" 2%. And I guess that was the picture of the state of the industry by the time, well, now that was 1 year ago. I think for change, talking to the bankers, we need about 5 years, to really see what's going on. Because if I'm talking to the bankers, that was then MIPIM this year in May, I said, what's your best guess on green lending? Because Blackstone with 8.5 trillion under management, okay? They are fully ESG compliant in the future investments. And the banker said, well, for now we are repacking the loans. So 20% of the total portfolio, and that would be a question to Peter, interesting to hear, that by the time in May, 20% of their portfolio was ESG compliant, and they aimed to get to 40, 50% by end of the year. Now we know for real estate, this is a lot of dynamic. My question is it enough?
Hubert, thank you very much. And we'll continue this conversation during the office panel because there'll be some interesting things on there. I know we want to just wrap up for a little coffee break before the next panel, but just kind of get any, from our panelists, I'd just like to get any kind of last minute pearls of wisdom or comments, and we'll wrap up the panel. And, maybe Peter, we'll start with you. Any last minute or things we missed that you want to get out to the group?
Well, thank you. I'll just kind of repeat myself. I think the next 6 months will be challenging, but I think if we are focused, then probably we can all survive.
Okay.
I'm born very positive, so of course we will survive this as well. One said, we are used to adapt to new situations. This will happen again.
Right.
So what I've learned over the last 30 years of real estate business is whenever a crisis comes up, Central and Eastern Europe is affected more intensively than the rest of Europe. But on the other hand, the opportunities, chances to do something of interest and something prosperous is in Central and Eastern Europe is very, very positive and very high, and I'm optimistic that this region will develop very well in the near future again.
Yeah, and I always notice that the tougher things get in Central Eastern Europe, it's also getting tough in Western Europe. And they want to move here. And a lot of the companies want to move here to set up. So, there is some net benefit sometimes in this situation.
Yeah.
For me, maybe Hubert's pitch was a little bit longer than you anticipated from
No,
a question
that's exactly.
point of view.
I thought it was going to be another 10 minutes, actually.
I have to say, Hubert, I'm with you 100%. I think the industry needs to really wake up to this. And we should all be thankful that the shit just hit the fan with the prices going through the roof, because we were way too comfortable paying not too much for energy, being able to pass it on to tenants. They didn't care too much because that wasn't too expensive either. So there has never been a better time to address this. But yeah, I don't think everything will be solved in 6 months. But I think it's time to really think and reinvent ourselves, and to just concentrate on what our core business is and how we can be better at that, whether it's investing or advising clients on what's the best decision they can make. So the dust will settle and there'll be clear skies.
Well, I hope it's not all fixed in 6 months, because then we won't have jobs. They could just do it online without us on a Zoom call or something. So thank you all for the panelists. Thank you all for your time and putting in the effort. We can have a big round of applause for our panelists. Thank you very much.